Good afternoon. It's exactly 2 minutes past 2. I'm going to hand over to Veron, who will facilitate the session and do the introduction. Over to you, Veron.
Thanks, Nubuntu. Welcome, everyone, and thank you for joining this webinar on South African infrastructure trends. My name is Veron, as Nubuntu has already stated. I work in the Capital Projects Appraisal Unit within GTAC. We provide infrastructure advisory services, and the National Treasury is our main client. Allow me, please, to move to housekeeping before we get started. I know that everybody's mics had been muted. Please note that we will unmute everyone once it is time for Q&A. So do not worry about that. You can still use the chat function, though, in the meantime, should something pop up. In terms of the webinar itself, we will start with presentations and then open up the floor for questions. As I mentioned, I will be facilitating this process. I also will be presenting as well. But yeah, that's it. I am going to turn off the camera because you've seen my face. I also invite the other presenter or presenters to also do the same as soon as they come in and then turn it off to be able to focus. Thank you so much. The first slide here is meant to set the scene on what's really happening in the infrastructure space. So we know that delivering quality infrastructure is one of the 4 pillars underpinning government's economic growth strategy. You see that when you go through the budget reviews and all the treasury books that they publish as part of the budget. And you've seen that also in how there have been a lot of reforms. You can see that there is definitely an intention to get things moving on that end. And that's because infrastructure is a key lever to propel faster and inclusive growth, addressing supply side constraints and creating jobs, which we all agree we need, but also about improving social welfare. So making sure my grandmother back in Limpopo has access to a hospital or other forms of social services. Despite the importance of infrastructure and government saying, yeah, we see its value, we want to do more, we're still faced with a lot of backlogs. I mean, there's a lot of projects that were meant to happen years ago that are still not happening. The infrastructure gap is widening. And we know that with the combination of those two and the need to meet future demand, whether that's looking at, basic infrastructure or thinking about climate change and all the things that come with sustainability and making sure we're building for the future, we definitely need more infrastructure, right, to support our development ambitions, whether that is the National Development Plan or any other forms of our development strategies. We've also seen that not much, we don't really have very good stories to tell when it comes to infrastructure itself. And that's because the infrastructure delivery system is inefficient. And how that comes up is you can see, if you don't work in the infrastructure space, you don't see it. But basically what's happening within the institutions that are meant to manage these things is that there's a lot of them. One, whether it's with planning, preparation, financing, and they don't all work together and they have different processes. Their roles and responsibilities are not always clear. And even when they're clear, sometimes they are duplicated. And there's limited, obviously, coordination. But some of the things we're also seeing is that we don't have a unified framework from which these institutions need to draw from or get guidance from in their planning, identifying, prioritization, and infrastructure of infrastructure projects. And some of the guidelines that practitioners work on, there's a lot of them, and they don't always talk to each other. But there's also, and this is, something we speak about a lot, the issue of institutional capacity and capability to do some of the things they're expected to do. These institutions don't always have the capacity to do what is expected of them to deliver the infrastructure that is required. And as a result, infrastructure outcomes have consistently underwhelmed. You can tell of projects that have faced delays, cost overruns, corruption, right? Leakages come up through corruption, but also comes out through government paying more for something maybe the private sector would pay significantly less for. It's things like that that make it really difficult for us to deliver infrastructure well, because you're already almost skimming through the little money that we have to move forward. But as you also know, quality has become a really big thing with infrastructure. Sometimes we do build, but it doesn't last long, there are defects, workmanship is terrible. So it's things like that that show us that things are not quite right on the ground, right? And it's reflective of the inefficient delivery system that's at the top. So it's more systematic, the issues we're seeing. The implication of those things is that we're not delivering infrastructure in the manner that we should. And the manner in which we should is delivering in a way that is the most efficient use of the resources that we have. We don't have a lot of money and want to make sure that we can stretch that. And how we're delivering now undermines the way in which we can support growth and obviously improve social welfare for my grandmother back in Limpopo. So yeah, that is the context. And as we all know, government is working to address these issues. And through the reforms that we've seen, one can also not expect to see impact immediately, right? Especially because these challenges I've just highlighted are systematic and deeply entrenched. But how do we then know when the tide starts to turn? Because we expect it to turn. We've been going through years and years of this disappointing outcomes, and government is saying, yes, we're happy, and here are all the reforms we're putting into place. How will we know when things are starting to go right? And that's why we're monitoring trends on infrastructure. We're recognizing the critical juncture which we find ourselves, and we've said that we are going to start compiling infrastructure trends report to monitor the patterns and track emerging developments in 2025. So we started doing the reports in 2025 in March, and the reports are intended to help us understand the direction, identify patterns and shifts, and we want to use them, or the insights that come from them, to inform reforms that are going to come. And we have used some of our insights previously to inform some of the reforms government is doing. But we also want to make sure that through all that we do, we try improve decisions and outcomes in the end. And in checking these trends and developments, we are hoping to catch the tide as it turns. So we hope we will be able to see that whenever it comes, because it is uncertain when we're going to start seeing actual impact from the reforms that the government is trying to do. So what is important here is that this webinar draws from the March 2026 edition of the Infrastructure Trends Report. The link to the report and presentation will be shared in the chat by Nobundu. So it's in the GTAC, I think it's called Resource Hub or something like that. And with that, I've set the scene. I'll now like to invite Peha to take us through what the trends look like. Thank you.
Okay, good afternoon, colleagues. I'm just checking everyone can hear me, right?
Yes, Peha.
Okay, thank you. Thank you. I was just turn off the camera. Thank you, Veron. So yeah, colleagues, I'm going to be taking you through an overview of fixed investment in the economy, and we measured this using the gross fixed capital formation, and we can see that the fixed investment remain below expectations. And this is seen by a contraction throughout the first 6 years that we have been monitoring them. And the only positive growth that we are seeing is between 2022 and 2023. And recently, we have also experienced a contraction of 2.2 in GFCF, which was mainly due to a decline in residential and non-residential buildings, as well as the civil construction works. And colleagues, we know that when we look at GFCF, given the low growth rates and levels, it also implies that its contribution to GDP from the expenditure side is quite insignificant. And in terms of the contribution, we also saw it recently with the mere fraction contribution to the 0.3 GDP growth that was experienced in the recent quarter. You can move on, Monica, to the next slide, whereby it also shows that in terms of investment levels, we are not performing quite well, and as the total at the moment, the recent total, we experience it's 647 billion in 2025, which was an approximately 134 billion when compared to the 2016 figure, and this was in terms of in real terms. And we know that the private sector accounts for 2/3 of the total investment, while the public sector accounts for 1/3. And colleagues, the current levels of investments are well below the NDB DP targets of 30% of GFCF to GDP ratio. And this is seen by the public investment, which are almost like 60% away from the 10% NDP target, as well as the private investment, which is almost halfway to the NDP target of 20%. And we know that there's definitely a need for us to address these levels, given that we are just 4 years before the 2030, and this is very critical for us to support the infrastructure delivery, the construction sector activity. And in terms of the activity itself, speaking of the construction sector, we are also experiencing weaknesses in that sector as well. Firstly, when we look at activity, the activity decreased from 156 billion in 2016 to 99 billion in 2025. And when we are also looking at the pipeline, the building plans passed, which is also an indicator for construction activity. Unfortunately, also the building plans have decreased over time. And the recent declines in the building plans were due to the lower demand for non-residential buildings projects. But then on the upside is that, colleagues, we know that the construction sector has the highest multiplier in output, and also has one of the high employment multipliers. And it also means that because the construction sector can absorb quite relatively a large quantity of low-skilled workers. And we've seen currently that the sector had an increase in the employed people, which was about 1.3 million, and this was it added 38,000 jobs in the market, and which was about 8% of the total employment, which just shows that it is quite important to the employment of the country. And also the sentiments in the construction industry, colleagues, are improving, although they are largely pessimistic, given that they are quite below the 50 index points. And firstly, when we look into the building confidence, which this year in 2025 it averaged 39 points, which was a 21 index points increase from the 2020 figure. It just shows that the majority of construction firms are dissatisfied. In this case, 60% of them are dissatisfied with the prevailing business conditions. And then on the contrary, the civil contractors seem upbeat, as demonstrated by the increase to 45 points in 2025 from the 19 points in 2022 due to the uptick in the civil construction activity. And our government, the public sector, is actually increasing budgets which are expected to increase to almost 1.1 trillion over the MTEF. We can see that the blue circles, yes, the blue circles shows that the subnational spheres, which are the provincial parliament as well as the local governments, and as well as the state-owned companies, accounted for the largest share of total spending. This was in 2024/2025, and this was about 84%. And then we are also seeing that there was an over 75% of spending in 2026/2027 MTEF that is allocated, budget allocations for 2026 MTEF. The largest sectors that will receive the largest share of the budget allocations are the energy, the transport, as well as the logistics sector, and as well as the water and sanitation sector. And we know that even though the payments for capital assets will continue to be the fastest growing component for the public spending over the MTEF, we recognize that the infrastructure development is largely on budget, with low private sector participation, as seen by the 25.2 of the 1.1 trillion that is allocated for towards the public-private partnerships there. But even though the allocations are increasing, colleagues, it doesn't mean that the capacities to spend is also there, as we can see that there was about 23.3 billion of underspending, which basically shows that we have the execution gaps that are persistent, and this perpetuating the supply side constraints, as well as they impede the service deliveries, meaning that the bridges that could have been built to prepare for the heavy rains were not built, and that also means that people cannot access the services that they require. And then in terms of the triple Ps, they do, even though I've shown previously that they have relatively low share of total infrastructure budgets, but they have one of the highest execution patterns over the years. Okay, we can move on, colleague. Okay, so one can ask themselves of whether the level of investment is enough or not. And for us to determine that, we used the country comparisons, which we thought they were providing useful way to just see where South Africa is when we compare it to both the African peers, which are to the right, as well as the global outside Africa, the global peers who are also in the same level, the same income level, which is the upper middle income level. And we can see that, colleagues, as our government expenditure to GDP ratio is quite higher than all of our peers. And but then the thing that I want us to take note of here is that South Africa invests up to 3 times more per person than its regional peers, at about $810 in terms of the GFCF per capita. But colleagues, you can see that picture changes when it comes to, especially when you look into the left to the right of the black line, we can see that that picture changes when we are looking at in terms of the FCF to GDP ratio, which shows that South Africa is one of the is the lowest amongst all of the peers. And then which means that in relative to the size of the economy, we are not investing well, despite having the higher GDP per capita. And also when we compare it, this is this is quite evident when you compare it to the upper middle income countries, whereby South Africa is underperforming quite, we can see the underperformance, whereby the GFCF per capita is almost half of that of Brazil, as well as of Thailand, and substantially low below the Malaysia, as well as Turkey. Colleagues, this just also shows that even with the lowest, compared with the upper middle income, the South Africa has the lowest performance, and it just shows the weak investment intensity in the economy. And the low levels of intensity do have an implications, because if we continue on this trajectory that is on the blue line, so the global infrastructure hub did estimate that if we continue with the current investment levels that we are doing in the public sector. Oh, sorry, I muted myself. So it's going to be presented by the blue line, and then this blue line, the one on the red is the investment need that we require to be at, and then there's also the one, the black one, which is the investment need when we also include the sustainable development goals. That is the when we consider that we do want everyone to have clean water, for instance, have access to sustainable cities and communities. And it is estimated that this gap is quite big, and it's growing, and then the estimates are currently about 2 trillion that there's still a need for us to. The financing gap is about 2 trillion, and this when we include as well the NDP goals on top of the SDGs. This can, like it was estimated to get up to 6 trillion. So there's definitely that need, that investment gap, showing that the magnitude of the infrastructure financing gap. It shows that there is a need to scale up strategic partnerships with the private sector to augment the government resources, so that this can be in terms of the fact that we need to tap into their capacity, their capability, as well as their finances. You can move on, colleagues, colleague, to the next one. And the good thing is that South African government did come up with the reforms to try to encourage the private sector participation, and as well as to try to increase the private sector participation. And these are the initiatives that they have come up with, even though these reforms are not exhaustive. Colleagues, our three published reports do have a list of other reforms that are in place for us to try to increase the private sector participation. And I will just highlight a few, which is the first one is that the fact that the amendments to National Treasury Regulation 60s came into effect in June last year, and this were to simplify the PPP process processes. And the amendments to the Municipal P Regulation 309 are still underway and will be finalized by June this year. And the good thing also is that because of the process review that the government did, decided to reconfigure project appraisal review process through firstly by reconfiguring the budget facility for infrastructure. So we know that the budget facility for infrastructure is aims to build a portfolio of a credible, investment-worthy projects, and instead of doing the appraisals annually, which was done previously, since last year they've started considering the evaluating the project quarterly, and this will commence even this year, as the circular was shows that the first window for 2026 is planned to close on the 3rd of April. And then there was also configuration of financing mechanisms. So government is pursuing alternative financing measures to mobilize private capital for sustainable infrastructure in emerging markets and developing economies, alongside policy actions to improve their use. And the third one, colleagues, is the fact that government has issued the sovereign infrastructure bond in December last year, and this will support the development of infrastructure financing as a standalone asset. And it managed, since its first issue, it managed to raise 11.8 billion, which was above their expectation amount to raise. And the fourth one is that there's an establishment of infrastructure finance and implementation support agency, and this agency is to mobilize private finance and improve procurement support and strengthen data management to crowd in private sector participation. So the agency consolidates the project preparation, that was a separate unit, as well as the appraisal unit and the P functions into a single institutional home. And the agency itself will start operations on the 1st of April this year. And in addition to the reforms that the government has done, the infrastructure working group, which was have come up with the 3 deliverables, which were endorsed by the G20 president in November 2025. The first one was the toolkit for developing cross-border infrastructure, and identify this one. The tool identifies barriers and provides practical guidance for developing regional projects. And the second deliverable was the report on blended finance and de-risking measures, which explores how guarantees and credit enhancement can mobilize private capital for sustainable infrastructure in emerging markets and developing economies. And the third deliverable was the framework for effective planning and preparation practices, which guides government in building a strong investable project pipeline and attracting private sector participation. And I believe one of my colleagues did post the link to these deliverables of the infrastructure working group. Yeah. And colleagues, that's it from my side. I'll hand over to Veron, who's going to present the qualitative side, who's going to present the quantitative side, as I was mainly focusing on the qualitative side, as well as the development. Thanks. Veron?
Thanks, Pam. maybe before I go into quality of spending, I'd like to just emphasize the importance of the G20 deliverables. So these deliverables were done under the South African presidency of the G20 last year. We were using the G20 to advance some of our plans, some of the things we've been struggling with. And one of the things we're talking about is how difficult it is to, develop cross-border. So that's infrastructure maybe shared by Mozambique and us. This due to Highlands, for example, right? So it was we used the platform to help us, navigate some of the things we're struggling with, and we explored how guarantees can be used, to finance private infrastructure by bringing in private sector. So you use MDBs and other institutions to draw in the private sector in. And obviously the framework, this is a very important document for helping people think through planning. It is done from a PPP perspective, but it's applicable for all forms of project. It is quite broad, the definition. I just wanted to highlight that is important. I have shared the link. Please go through all the deliverables, not just those three we've mentioned, because there were others. Yeah, thanks. So just based on what Per has said, she's talked about how one, infrastructure investments remain subdued. She's talked about how because of that, the construction sector also, is still struggling. I mean, the construction sector has been struggling for years now, and it's just not getting out. And we all know that civil construction is one of the things that will get it out of the woods, and it will eventually when we do finally achieve our infrastructure goals. And what she ended up by saying is that, South Africa invests less for an economy of its income level. So there's definitely more money needed. Yes, private sector will help, but we also need to boost that as well. So from that discussion, we can clearly say, without doubt, that more money is needed to deliver more infrastructure, because we do need more infrastructure. But I also want to say that it's not only just about the money. It's also about how we spend it, the money that we have. So when government invests in public infrastructure, the idea is that those investments will generate economic, social, and financial returns that justify the resources committed. However, in practice, that does not always work out that way, right? The IMF estimates that about 33% of resources spent on building and maintaining public infrastructure are lost in the public investment process due to inefficiencies. This is true for South Africa, actually. And I'm using the AG, and I saw the AG is in the call. So I'm using the AG to show some of these things. But before we get to the AG, we also know that there's been some research in South Africa that shows that the fiscal multipliers of government investments to GDP is low and possibly even negative, which means that returns from public investments are far lower than how much we are putting in, which is a very disappointing outcome, right? And on the ground, what that looks like is some of examples you guys can give me, right? Each of us can list several projects that show some level of inefficiencies, whether it's a hospital that is poorly located, a road that is taking way too much time to complete, a power station that went over budget, and we know which one I'm talking about, train sets that are sitting idle, or schools that were never completed, right? And I can ask each of you, and you can give me examples of where you're from or what you've heard from your friends or everything that show you that. But what the Auditor General does is actually give us case studies that actually show that exactly and show us where the inefficiencies are. So if you go through the annual reports, and I encourage people to do that, they're very detailed and very informative. You can see some of those examples. I'm also happy to report that the good case studies are also given. I saw that they had featured student housing as a good case study, which was really nice, because we worked on the student housing. We work with most infrastructure projects that the fiscus funds anyway. So audit findings on infrastructure help us understand the extent of the inefficiencies. We know they're there. I mean, that's not new information, but do we know how bad it is? We think it's bad, but we don't know how bad it is. And you can now draw inferences based on what the Auditor General has done. If you look at the chart, you can see there's a lot of blue. And I'm hoping people are not as colorblind, because when Per was talking about colors, I was like, oh, I hope they were not people that were colorblind in the chat. But the longer line is blue, just for those that are. And that is showing that we see a lot of problems with delays in our infrastructure projects. That's followed by an orange line, the second longest, and that's talking to costs. And as you know, like when a project is delayed, it could affect costs too. So it's almost like the two almost self-reinforce, but obviously there's other things that the cost issues represent. It represents cost overruns, yes, but it also represents like, cost measures that are not in place, the way we're managing money, the way we're planning money, and things like that. Quality, like I mentioned when I first started, is also a big thing, and the Auditor General finds that throughout the years that we assessed, which was 2020 to 23 to 2024, 25. And commissioning issues, what that shows is that some projects, even though they're done, may not be used because maybe something is missing or they haven't done something. Sometimes they say it's complete when it actually is not. So it's those kind of issues. And apparently there are also projects that actually never get used, even though it's completed. It's not apparent as a clear effect, but yeah, even when completed. So that's what you're seeing with the colors. So I just wanted to give context. I don't have numbers for 24, 25 for municipal projects, but we do for national and provincial projects, and that's what we're showing there. But basically, in the last financial year, the Auditor General audited 152 national and provincial government projects, and focusing on health facilities, schools, higher education facilities, housing, roads, water, infrastructure, and government buildings. And all of those projects were worth 47 billion. And as you see, there were a lot of delays, often by about 4 years in that year on average. Cost and quality challenges with projects are rife, and more so compared to the other periods. I mean, it just seems like 2024-25 is not a good year. Maybe it was a bad sample, I could say, but it's not. I mean, it's a random sample, so it is a representative of what's really going on the ground. You can't sample all projects, so that's what we're working with, and that is what it's saying. For local government, and you can see that in the 2023-24, which is the middle block, between 23-24 and 22-23, on average, 60% of projects were behind schedule. So it is a big problem, what we're seeing. So you can definitely now start putting a number to like, how often do we see inefficiencies in infrastructure? And you can break them down to say, oh, well, if you're talking about delays, this is how much they are. And if you're talking about cost issues, this is how much they are. It's not all bad. We're not special in that these challenges don't only happen in South Africa, but we're not doing great either. And the next slide, please, Monica, shows where we are relative to some of the countries in the world, right? This is done by the Economist Impact. It's like almost an arm of the Economist if you read the publication. So what they've done is they've developed a barometer in 2023 to measure countries' ability to deliver efficient and quality infrastructure. So what you're seeing there is our score, and our score just there in the south is 52.1. It's a little above average. I mean, but if you look at countries that are doing great, that's the UK, Sweden, you can only hope, right? It's why can't we deliver as efficiently as they can? Yes, we are among our peers like China and Brazil, but I mean, I think we should definitely aim for more. And what they've also done is they've gone into the themes where things get really interesting. Monica, please, next slide. And in the themes, you better able to sort of dissect where the issues really are, which I really enjoyed this. So just to give you like a layout, what you see in the round circles is the South African score. So ZEF is for South Africa, score 56.1 for governance and planning, which is consistent with what we know, right? And average, the AVG represents a global average score. So basically all countries in the sample on average did, when everybody combined, the average was 61.7 and South Africa scored 56.1. I mean, that's a fail, right? If you look at the average, you're definitely below average, which is not a good sign. And when you look at it, say, just focusing on governance and planning, you can see that most of the challenges there, although they're not as bad, it's about regulatory effectiveness. How good are policies, regulations, frameworks to support infrastructure? So that's what that's asking. Private sector engagement. We know that we've been talking about engaging the private sector. Per just also mentioned that, but how good are we? Doesn't seem like we're very effective, and we definitely need to strengthen that. But it seems we're very good at planning and coordination. And I mean, you know that we write amazing plans. Look at the NDP, look at the national infrastructure plans, but the question then becomes, do we translate that into real impact for the people on the ground? And the other columns on this chart will tell you no, but we're going to get to that. It also shows you that we are struggling with implementation and outcomes, well, which is actually related to just the point I just made, actually. We might have plans, but we're not very good at implementing, and obviously the outcomes are affected. The next one, which is talking to sustainable financing and investment, there we are above average. Can you see? Which is encouraging. It's about adequacy of investment. Apparently, we're not doing so bad, even though it's yellow. It's not terrible. Red is like where you need to start panicking. But maybe where we do need to stop panicking is about financing for social good. Like, you know, are we really supporting the people on the ground, people that are suffering poverty and stuff like that? And this shows that perhaps not, right? And then there's apparently we're doing good when it comes to viability support and de-risking. One of the G20 deliverables deals with this, and apparently we do a very good job of de-risking financing, sustainable financing, and obviously we are very good at fiscal sustainability. The Treasury is one of the most amazing treasuries in the world, and I'm not exaggerating. The third theme is social and community impact. Just looking at the colors, it's a robot, right? You can see community engagement and support is not amazing. It's actually the worst. And when you look at protections for workers and communities, that's also not good. We're not really taking care of our people, and we need to do better, right? And there's also lower score for access to public services and utility. I mean, that's disappointing. We're talking about trillions that Peha was quoting, yet access is still not equitable, which is sad. And then if you go to economic benefits and empowerment, we can see that employment remains a problem, economic opportunities and job creation. So the government is on the right track on what to fix. The problem is we don't always know how to, and that this clearly shows it, right? And then obviously when we get to the final theme, which is about environmental and sustainability and resilience, we see that we're very good with environmental management and resilience and adaptation. Apparently, I don't really believe that. And we're not very good at environmental impacts and embedding that into the way we're planning and thinking about planning. So what we can draw from this, I mean, you have to look at the numbers. I'm like, but what is this telling me? Telling us that South Africa scores low for governance and planning, social and community impact, and environmental and sustainability and resilience. But the thing that we can take from this is that we struggle to translate infrastructure investments into effective outcomes. Investments do not benefit everyone in the same way, which is sad. And projects often do not integrate sustainability, climate adaptation, and resilient measures. And obviously, as you know, if it floods or there's a drought, there are physical risks to the infrastructure we have, which costs a lot of money to fix. But more than that, it disrupts service provision. So, you know, my grandmother in Limpopo might not be able to get her pension because, well, maybe the post office is flooded and things like that. Yeah, next slide, please. So we've just seen those things, but what does it look like when we look at the broader regional analysis? Per already did a regional analysis, and this sort of closes the loop in terms of efficiency. And we can see that many countries in sub-Saharan Africa achieve half of their potential infrastructure outcomes from public investments. So it's still carrying on through the same theme that, you know what, we put in a lot of money, but we don't get a lot out. And in the chart, it's the yellow. I'm sorry, it's the chart next to the yellow, sub-Saharan Africa. So it's the gap is 48%, whereas everybody just seems to be doing better. We're actually doing worse than everybody else as a region. And I'm not sure if I mentioned this, but when I started, I actually did, when I said the biggest problem here is inefficiencies. But more than that, the IMF has said, you know, it's not just inefficiencies, it's inefficiencies related to weak infrastructure governance. But what is infrastructure governance? Infrastructure governance has to do with how infrastructure decisions are made, who is accountable, and how the entire process is overseen. So the chart on the right, can't tell my left from right, is talking to South African governance indicators. So they did a study on South Africa, and they noted that between 2000 and 2001, there was definitely a decline in the governance indicators, and it's not surprising that we would see a low score for governance effectiveness, which exactly matches our narrative today, but also control for corruption. And I think that period also coincided with state capture. So it's not, I mean, it's not crazy that that is so low. It was around the same period that they mentioned that. So yeah, so what are we saying? We're saying we're not spending efficiently. So the quality of spending is low or poor. Yeah, basically, if you put in R1, you're not going to get R1 out in returns, right? And what we're saying is the problem is the way we are planning, delivering infrastructure is just not working from a governance point of view. Next slide, please, Monica. So, I mean, everyone understands that infrastructure development is a highly complex process that requires enabling policies, frameworks, and regulations, significant financial resources. We were saying how much we need a lot of money, and technical expertise. We need people that can do the job and do it right the first time, and strong institutional capacity, right? As well as effective planning, delivery, and asset management. So you need to be able to maintain your infrastructure so that it can last long and do what it's supposed to do. However, we also need to look at how these factors sort of interact with each other. And that relates to what we call the public infrastructure management system. And what you see there is the framework for public investment management. And you might, if you work in infrastructure, you might be like, hey, that looks a bit like the framework for infrastructure delivery and procurement management, which is the FIDPM, and it does. What you have here is just a bit broader because it's looking at, learn from your mistakes and do assessments afterwards to make sure that you don't repeat them, right? So it is broader, but both of them are concerned with ensuring that infrastructure is delivered effectively and maximizes value for money. So an effective PIM, as shown there as you go through, is supposed to be anchored in the 3 blocks, or 8 stages. And the first one is talking to making sure that there is strategic guidance from the higher level, and there's talking to your NDP, your NIP, and also that how that cascades down to your sector plans, right? So you know the process. And when we get to 2, we're talking about planning and preparation. That's where the feasibility studies and feasibility studies come in. The third one is talking to independent review, which is what the Capital Projects Appraisal Unit does for the Treasury to validate some of the findings that came from stage 2. So you've done your feasibility study, you've come to us, we're like, okay, let's make sure that you are not being optimistic about some of these things. Let's test this, let's question your arguments. Let's do that, and that's what we do. 4 is, how things end up at the in the budget process to make sure that we are prioritizing the right projects within the purse or the constraints that we have in terms of money, and making sure that the most important things go ahead. So it's about urgency, and because, I mean, we're only working with so much, so sometimes you have to create a criteria that allows you to make sure that the things you're choosing at this moment make sense. We then go to implementation, and we all know what that is. And there, you have to monitor your budget and make sure you do contract management and making sure that the people you've hired are doing the right thing. Also has to do with procurement, right? Making sure that there are no loopholes or leakages there, corruption and things like that need to be nipped in the bud to the extent that you can. Some things are beyond your control. We also need in that 5 to 6 monitor progress on an ongoing basis and make sure emerging challenges are addressed, including a decision on whether we need to stop a project or not. Unfortunately, sometimes it's just better to stop than to continue. You cut your losses, but in government, that doesn't happen a lot, which is a shame. And 7 and 8 are talking to operations. So you need to make sure there's adequate resources available to make sure people can come to the hospital. Sometimes hospitals are built and no one is there to operate them, operate in terms of there are no nurses and there are no doctors. And the last part, which is something that I think government needs to do more of in infrastructure, is an ex-post evaluation. Looking back, how did we do? What can we change going forward? And what have we learned from it? And then you feed that into future investment decisions. And that's how it's supposed to be. What this analysis highlights is that government needs to think about quality of spend as it scales up public investments, right, and implement their reforms to make sure that the money we're spending does translate into tangible outcomes and maximize impact on the ground. In the end, we are interested in maximizing value for money, and these changes that are happening and that we are advocating to happen and improvements will go a long way in ensuring that infrastructure investment meaningfully contributes to economic growth, improve service delivery, and obviously create the much needed jobs. And that is my story. Thank you. And I'm saying thank you, but I'm also going to be the one that says that we have come to the end of the presentation. We are now going to open for questions. Nobuntu, please ensure people can now unmute.
Yes, I'm on it, Veron. Thanks.
Thank you. Okay, we're just waiting for Nobuntu to get everybody unblocked, because I can still see that that's still turned off. So just give us a second, colleagues. Thank you.
Just a second.
Oh, I think we're okay now. So any questions you would like us to clarify, comments, even if you want to share your observations as well, that is welcome. You may contribute. Yeah, please, Landiwe, you may come in. And I see another hand. Can't see. Oh, there was another person, Oliver. Yeah, sure. Oliver, you may come in first, and then Landiwe, you may come after Oliver. Thank you.
Good afternoon, all attendees. I appreciate the wonderful presentations. I just want to have a comment on essentially the projects that have been in place over the past few years, in particular, focusing on the gas IPP. And I attended an industry presentation yesterday, and even in the gas IPP, they were saying that there's a big gap between what government is issuing out as in terms of the RFPs and the documentation thereof, and what industry is providing. So that gap, and that critical gap, is actually creating a lot of issues from industry side, and they actually raised that point because they spoke about the gas cliff and the fact that we don't have a terminal that has been built. So even funding the terminal and stuff hasn't been finalized, and they doubt it's going to be finalized. So I just wanted to get a perspective from the team here to see those gaps that exist between what the state is able to provide in terms of guarantees and assurances, and then also the commercial viability of these infrastructure projects. What is the plan to address that part? And then my second question is in relation to the capacity building within the state, which we all know it is very poor. And looking at the past past administrations, that issue hasn't been resolved. So from a perspective of a project developer, the environment doesn't necessarily look like everything's in place for us to actually direct our investment or to form consortiums for investment. And yeah.
Thank you. Is it Olivia? Oliver, you may come in if that's you.
I just spoke now. I think
it was Landiwe. Thank you. Just your hand was still up. Yeah, thank you.
Yeah, it is me. No, thanks very much for the presentation. I just want you to talk more on there seems, at least certainly from this picture that the delay in projects, in other words, schedule, appears to be a perennial problem, and so are the costs. And I would imagine this goes hand in hand. I mean, if you delay projects, there will be cost overruns. But I'm actually even much more perplexed when I look at the Economist rating. We seem to be above average with regards to sustainable financing and investment. Are we measuring the same thing here, or perhaps maybe different aspects of that? Because it'd be quite interesting if you could maybe clarify that to me. Thank you.
All right. Are there any other questions? Maybe one more before the team responds. Okay. I'll tap that. I'll invite you to respond to. Let me take a step. If you want to augment, sure. I have noted the extra hands, but I'll respond solo. So I think, Oliver, you were talking about the funding gap. There's a funding gap between what is given by government and what the private sector can bring in. I think that's what you were asking, and how do we close that gap? And I mean, I'm not sure if you're aware of the budget facility for infrastructure, but that's one of the avenues government have been trying to at least get projects over. So if you are viable and you have a credible gap, you can come into the budget facility for infrastructure. Obviously, we will review the proposals, make sure it makes sense, and make sure the gap can't be closed elsewhere. There needs to be a market failure for government to intervene. So we are looking at those things and making sure that the gap cannot be financed by anyone else or in any other way. And then we recommend, our job is to recommend that the Treasury supports it, and that happens. And some of the ways that is done is through the infrastructure fund. So they help with blended finance transactions like that. So I think the project you quoted could be one of those that need to go through the budget facility for infrastructure. But we are very strict in the process in that you just need to make sure there's credible, for example, he said there was no port or no facility. For the port that needs to be built, there needs to be a comprehensive feasibility study that is done so that we can say, yes, this is a credible investment, it makes sense, or no. I hope I've answered that. Beyond that, we can take it offline. Capacity building. So yes, I agree that capacity building is a big thing, and that's part of the reason why we have preparation support right now. And I think there was money was made available to GTAC, ISA, Infrastructure South Africa, and the DBSA to support sponsors in putting together projects. But as you also know, the PPP unit also supports sponsors if it's a PPP. So that's one way of supporting them. The other way is because sometimes it's not that granular, right? Maybe it's not about getting a feasibility study out. And I mean, the expectation is if you can't do it in-house, you can still hire a consultant to help you through that. But you need to have some kind of capacity to ensure that whatever they're giving you makes sense, right? There's going to be a new agency, and Per spoke to it, Infrastructure Financing and Implementation, Support Agency, yes. We'll have a capability desk that will help people or sponsors with packaging and preparation, not preparation in the smaller sense, but yes, there will be elements of preparation because the agency will combine the PPP unit within GTAC, us, infrastructure fund, and other units within the Treasury as well. So that is also going to help capacity building. But obviously, I agree, more needs to be done in that regard, because even when there is preparation, which it has been around for a while, it seems like it's really, really slow. And I'm wondering if we're just not hiring the right people to begin with in the municipalities or departments where, you're supposed to have infrastructure capability or knowledge. I'm just wondering whether we're not hiring the right people to begin with, and that's why we're facing some of those problems, because the regulations or the frameworks and the requirements haven't changed much, But yeah, for sure, definitely a lot of work to be done. I'm not sure if I understood Landiwa's question properly, but it was about delays in projects and why we're seeing that and how that translates. I might ask you to come back, Landiwe, because I don't know if I get it. Per, did you understand the question well? And I note that you said, in terms of the way economist impact is measuring sustainable financing, are we measuring it well? So sustainable financing is more on the green side, if that makes sense. So that would make sense to be a little higher than the generic high level number, which is just infrastructure that may not take into account, you know, climate change or green things. But yeah, if I haven't answered your question, you're welcome to raise your hand again, Landiwe. In the meantime, I will be accepting new questions unless Peha wants to talk. We have Paseka. Paseka, you may come in, and afterwards, I'm going to invite Dr. E.T. Confidence Muloko. And then, yeah, I'm going to invite a lot of you. And then Dr. Stacy, I believe. And then Landiwe wants to ask again. You're welcome after the colleagues I've mentioned. Thank you. You may come in.
Thank you, Vin. So my question is kind of like twofold. And the last one would be a comment just based on the latest comment. So first of all, I think I enjoyed the presentation. And I think I'm drawn more into this comment, which I think it was covered somehow in the presentation, that there is a concept called benefit realization, which effectively talks to, you know, the lesson learned that we have. And it boggles my mind that the government, you know, let alone the fact that you're saying we're not spending enough in terms of infrastructure, but the quantum of the money that we're spending is still, you know, material, right? So, but when we are faced with that kind of an expenditure, but we don't take stock and say, hang on, let us check if we are deriving value out of what we're doing. But almost like as a structural, you know, issue, in a sense that we need to structurally formalize the issue of benefit realization, where we're going to have lesson learned and try to assess on whether we are deriving benefits out of that. It works in environments where it's being used. And I propose that as part of solution, as reforms, we need to get into that space where we are trying to assess our work. So the last one is on the issue of inefficiencies. Perhaps I would like to pick up the brain of the people in the room to say, how much of our current SCM processes are benefiting to these inefficiencies in terms of this? Because majority of projects that are actually being sourced, the problem that comes with it is that we are sourcing incorrectly, and somehow some of our policies are telling us that the cheapest guy is the one that we need to do. And when you do kind of like audit these things, you start to realize that the cheapest guys are the ones who are bound to leave their project, and it will be reappointed for somebody else. And that time is down the line, and then majority of the money is being spent. So it will be interesting to see how much of that we look into. I think that there can be something that can be derived out of that. We turn that lemon into lemonade. Thanks.
Wow, thanks for the contribution. Maybe before Dr. Muloko comes in, I'll just want to say, because yours is easy, it's more contribution, and I really appreciate that you did it. So benefit realization is part of that. You know, when we were going through that PIM chart, number 8 is what that is about. It's actually that, and I agree with you 100%. I think the reforms that we need to be implementing going forward is just to make sure that we do that benefit realization assessment. And I also agree with you that, you know, supply chain rules are not so useful when it comes to infrastructure, and that's why they were doing some reforms in that regard. But I've also had an experience where we hired a service provider and they were the cheapest, but they also couldn't do the job. You know, basing it on price alone is not enough, and perhaps there needs to be more intentional changes around some of the criteria we enforce for infrastructure. So I agree with you. Thank you. Dr. Muloko, you please come in.
Good afternoon, and thank you very much. Thank you for, to all the attendees and to of our colleagues who have given us a very detailed presentation on infrastructure trends, a South African perspective, including infrastructure investment management. As we don't have too much time, let me just start at the end which I could have said at the end, by challenging this 40-odd group of participants who are on the platform, that they should commit to go back to the drawing board to approach this problem, which is about 26 years old, that is highlighted today, and emerge with very simple, implementable, and effective solutions that can be adopted and get implemented by GTAC, the National Treasury, and the entire government for the good of our people. I'm tabling this appeal in my capacity as a former civil servant and a former member of Foresight. Although I'm not sure as to how this can be done, seeing that in the very same way as we are sitting as a country where we have got a chronic economic growth trap, we are unable to break out of this 26-year cycle of poor outputs and outcomes. I've listened very carefully to Me Monica and Me Vernon, and I was convinced that we are in fact walking the path that we have been on since the year 2000. I'm saying the year 2000 because if we look back at the program of government of infrastructure planning, delivery, maintenance, and management, it is very clear that the first 4 years of democracy, that is from 1994 to 1999, was the time when we did our best, followed by the period that was around the 2010 FIFA World Cup. Otherwise, if you were to go back and look at those graphs that were giving us the results of, for example, what the Presidential Infrastructure Coordinating Committee and the former Minister of Infrastructure did, you find that the graphs were almost all the time on the red. What South Africa needs is not reform, because I hear and heard Mama Kato talking about reform. What is needed is transformation of the infrastructure and the people that are behind it. Because reform usually is tinkering at the edges. It results in quantitative change. Whereas when you are talking transformation, you are talking about something that will say, let's start looking at the basics and end up changing the things qualitatively. Let us not focus mainly on money or just giving the responsibility to the private sector. Because those of us who remember what happened around the FIFA World Cup will remember that the private sector, in the form of the Big Five, did us very badly. And the Big Five got punished just a little bit for the misdemeanors that they ended up getting involved in. That's why you find the ring around Johannesburg flooding, because of the poor quality of the road infrastructure that they gave us. In closing, let me just say, it might be worth our while to learn lessons from our BRICS partners, especially from what is happening with the China's Belt and Road Initiative. If it is necessary, we should even send people to China and go and train them and bring them and have a state-owned entity within the Department of Public Works to deliver, and not just to be an agency that manages people that have been given tenders. The performance of the China State Engineering and Construction Company, especially its PPP model, gives the ownership of the project and the economic base and puts it in the hands of our people instead of the hands of the few, elite and rich. Thank you very much.
Thank you so much, Dr. Moloko. I will comment after Dr. Stacey has come in. Thank you.
Good afternoon, colleagues. I'm Stacey Lee Murray. And thank you very much for the presentation. It was quite detailed and succinct. I'm looking forward to going through the report, which gives you a bit of more time just to chew and mull through the detail that was shared. I just want to comment and then ask a question or two, if that's okay. I just want to go back to the efficiency in spending economist infographic that you showed us. I think that yes, there are areas where we are performing above average, but if you look at the percentage of performance above the average is not impressive. So I hope that you really think about this, and when you do this presentation again, if you do to another audience, we should not communicate it in such a positive manner, because it's quite a minuscule above the average performance percentage if you do the numbers. Because across the board, we need to perform better. And I do quite agree with the previous comment made that we need to do something quite drastic and radical. And I don't know if bringing another agency on board is going to do any good, harm, or harm, or is it going to do any good? We don't know. So that's quite concerning, because here you have Infrastructure South Africa, which is an arm of National Treasury. And as you've said, you are working, or not you, but ISA plus DBSA, National Treasury, are charged with the mandate of coordinating blended funding. So then I know you said that a part of this new agency would be to assist with preparation for projects. So I think that we do need more information. I've not seen anything in the media or covered by the media about this new agency. It would be great if you don't mind to share some information about this new agency, what they would actually do. Is it something that has gone through the Gazette process already? Would be interesting. And so yeah, isn't it going to be a duplication? This is my concern around this new agency, because I think that we have quite a bloated public sector as it is, and it seems like quite a few agencies attached to national departments. So I think that we need a bit of streamlining, and if it means consolidation, and then also it ties into what you commented earlier around, are we not hiring the correct persons to perform functions? I'm speaking now across the board, agencies, national, local, provincial government. These are real questions that we need to answer. And another comment that I just want to make around the procurement. I think it's very dangerous to have this notion or communicate the message that it's just the lowest price that is taken. I too have been a public servant in my former life, and it's not the case that it's always the lowest price. There are technical specifications that need to be complied with when you draw up a specific tender or a job that needs to be done. And the onus lies with the bid adjudication committee to select the best suited service provider. And I've been in adjudication committees, spec committees, where you actually choose the best suited, and you can, based on that, if it's not the lowest price, you motivate as to why you are not selecting the lowest, but to just have this message that it's always the lowest priced bid that comes in that's taken. That is simply not true. And so yeah, thank you. I know I went off on a bit of a soapbox, but thank you.
Thank you so much. I'm going to start with you, Dr. Mloko. I'm sorry, everybody, we are running a bit of time. I just want to say that I agree that there was a lot of underinvestment, especially in the late 80s. And obviously the results thereof started to show much later. And we do need to learn from our peers, including the BRICS. And we are in the BRICS process because we do work with them. And maybe I'll also put my hand up to go to China and understand their road systems and how they're able to deliver so quickly and so efficiently. I also agree that what does need to change is actually the way we do things. And in the chart I showed, it showed everything from, guidance, which is talking about the way we plan to the way we take lessons learned back into the decisions we're going to make. And that's the thing the Treasury is looking to change. So it might be changing the way we're thinking about planning, infrastructure, financing, and procuring, and all of that. So going back to the roots, but your call to action is noted. And we are open to the suggestions. And if you are ready to come and present through this webinar, you're welcome to, once you have solidified and gotten enough suggestions from the audience. And then Stacey, what I want to say is your comments are noted, and we were not saying it's positive in the, we said it's not looking good. We said it's not special, but it's also not looking good when you look at it. And when you go into the themes, there's some things that are doing better than others, but overall, it's not positive. And your caution around saying everything is about price and maybe we oversimplified is also noted, and we agree. In terms of IFISA, we're not creating a new agency. It's a consolidation of things that already exist. So like I said, it's KAPAO, it's PPP unit, it's the infrastructure fund. The infrastructure South Africa is under public works and not the Treasury, but they're not part of that. But I mean, these are institutions that already exist with capacity that already exists. So we're not duplicating institutions. We're just taking what already exists and streamlining, like you said, that's the word you use, consolidating and streamlining to make sure that when the PPP unit or the PrEP unit is done, they hand over to me to validate, right? And then I hand it over to my colleagues next door to say, okay, let me go find financing. So it's almost like it creates a coordinated process within the same institution that allows us to work without bloating the public service a lot more. I hope that makes sense. I remember something, Mulok, I forgot his name. One of the first people who asked the question, Landiwe asked. I will share in the chat work we did on infrastructure implementation challenges, and it does go into some of the reasons why we're seeing cost delays in some projects. And I've also seen like engineering research from universities that also delve into that. So yeah, that is my speech. But because we're over time, I'm not going to take any more questions. I'm just going to close. And with that, I would like to thank everybody who joined us today. And Nobuntu is posting a poll so that everybody can please rate the webinar. Thank you, everybody that joined us today. Thank you for your time, your attention, your contributions and suggestions. That is welcome. I wish everybody a great weekend, and thank you so much. With that, the webinar is adjourned. Thank you.
Thanks, everyone.
Thanks.
Thanks, everybody.
Bye.
That's bye.